In the fast-paced world of business, finding a clear path to profitability can be a challenge. Welcome to 0 to 100 with your host, Jared Guy Randolph, seasoned business and finance expert. Tune in for actionable insights and strategies to accelerate your business success.
Hello, Accelerators. Today on 0 to 100, I'm excited to introduce our guest, George Sleeman. He is the founder of TMTY Tax Consulting and Compliance firm that has a specialty in sales taxes, and they work with businesses across the U.S. The founder, George, has an incredible background. I'm excited for you guys to get to know him. He has a dual degree, one in criminal justice. He worked in that industry for many years, and also in accounting, where he has been servicing individuals and businesses for over 35 years. He is also one of Dave Ramsey's ELP-endorsed accountants. Some of the things that we're going to cover today are going to be mistakes businesses make around taxes, how to do a reverse audit for overpaid taxes, how to do proper sales tax reporting. And this is something you're all going to want to listen to. I learned a lot from this, and all the things that you didn't know you need to know about sales taxes, and also VDAs, which are voluntary disclosure agreements, and how they can help you and keep you out of trouble. For those of you who do not know me, my name is Jared Guy Randolph. I am the founder of BoxFi. We are the nation's leading payment consultant, providing business growth solutions for businesses across the U.S. And I'm very excited to share the network I've built over my 25-year entrepreneurial journey to help you grow your business and become more profitable. Ladies and gentlemen, let's accelerate together. George Sleeman, it is wonderful to have you on 0 to 100. How you doing in 2025?
Well, it's only 6.5 days in, so far doing pretty good.
And you're actually our first interview of the year, so don't muck this up.
All right, I'll try not to, but I ain't making a promise.
So you are the tax consultant and compliance extraordinaire and work with firms across the U.S. And we're going to dive into your specialty and what you focus on and how you help the clients that you work with. But you have a really interesting backstory, and I would love for you to tell the audience how you ended up in this business and built the success you've built.
Okay. I cooked my way through college at first, and I became a bartender, and I did all kinds of things. And I used to have really long hair, believe it or not. But I started working in corrections back in 1994. And I spent the majority of the time between 1994 and 2011 doing law enforcement. I was a cop. I was a correctional officer. I was a probation officer for a short stint. I've done that in Arizona, South Dakota, and here in Colorado. But the whole time I was doing taxes, income taxes, because back when they taught you things in high school in 1987, my senior social studies or civics, whatever you want to call it, teacher had us do taxes and taught us about taxes, taught us about the stock market. And I realized stock market's not for me, but I enjoyed doing the taxes. And so when I got hurt on the job as a cop, workers' comp wouldn't pay the bills, so I started charging for my income tax returns. Since then, I've opened up a second company that does nothing but the income taxes. And TMTY has developed into a very niche company of sales tax and Secretary of State compliance and, depending on what happens in the court cases, the CTA BOI arena. I was a cop, I was a bartender, I was a cook. Now I'm an accountant. I've done criminal justice and in accounting.
I mean, you've done a lot in your life and in your career, and you've worked with people in many different businesses in many different facets. And I believe that that's one of the things that really helps you bring that human element to the business. Talk to me about the importance of dealing with a human being who understands the nuances of compliance and law, especially in today when so many things are automated.
Automation's great. Don't get me wrong. There's many things that can be automated. I don't think that everything should be automated. I believe that if you want to talk to a person, you call me and you'll get the owner of the company, me, and we will sit down and we'll hammer out the problems and the details to get things taken care of correctly. There's a lot of companies out there that automate sales tax. They'll automate your sales tax collection. They'll automate your sales tax reporting. They'll automate the filing of those sales tax returns. But let me give you one example of where that doesn't always work. I have a client, automated sales tax collection. He was using the automatic filings through them. I was just on board overlooking things. The client is supposed to check every single state by the 6th of the month with this particular company to ensure that it is right. Well, he doesn't have time. I'm not able to tell immediately if something's wrong with his data collection. But that particular company took all of his information for the past 2 years and said those sales happened in a January timeframe that was due. And he ended up paying something like $20,000 extra in sales tax because we didn't file those individually, personally. He had that company filing them on what's called auto file. Now, had we filed them individually, we would have seen, whoa, wait, this is wrong. And we could have backed out the bad information.
So wait, is that based on them? And was this an e-commerce company?
E-commerce.
Okay, so this was an e-commerce company. Was that based on them filing all of the information in 1 month versus filing it in individual months?
We had filed them as should be for the last several years.
Right.
But this automation company gathered up all of his information for the last 2 years and said that it happened in January of 2024.
Ooh.
And so, we paid all of that sales tax that he's paid in the last 2 years. He had to pay again.
There was no way of contesting that?
There is. And we went in and did that. We had to amend those returns. We got refunds where we could, but some of the states won't give you a refund. They give you a credit against future sales tax.
Wow.
And so he was out 20 grand out of cash flow.
Wow.
And it took us months to get that squared away.
Okay, that sounds like a bit of a nightmare, and frankly, that might be an understatement, because if I had $20,000 disappear out of my account, or I had to pay that I did not desire to pay, I'd be really frustrated. So, what are some of the mistakes that businesses make around sales tax and compliance, and ways in which they can avoid them?
There's a couple different big ones. Number one, don't believe everything on the internet. Everything that you read on the internet is subject to interpretation, as all rules and laws are subject to interpretation. If you got 5 accountants in a room that said you have nexus in this state, I would be amazed. You get 5 accountants in a room, you will get 6 answers, because that's just the way people interpret stuff. There are some people who believe that because they're e-commerce and they only sell on Amazon, that they don't have to do anything in any state other than where they currently live. And some of them will even argue that, well, Amazon collects it, I don't have to do anything. Yeah, you do.
Okay, so
Biggest.
So let's talk first about Nexus. So give our audience, for those who are not, might be a retailer, they're not totally familiar with Nexus, what it means and what the key aspects are to make sure that you are compliant around Nexus on a state level, per state level.
Nexus is, in layman's terms, a presence. Okay. You have a physical presence. You are physically, my feet are in Colorado. I have a Colorado physical nexus. If I sold a sales taxable product or service, I would be subject to sales tax on those items or service. Some states tax a service, some don't. Colorado is unfortunately trying to, and I'm working with a group to make that not happen. But that, in a nutshell, that's what Nexus is. Okay. And the Quill decision with the Supreme Court all them years ago said that if you have physical presence in a state, you have to collect and remit sales tax, and you don't have to anywhere else. Well, along comes 2018, 2019, and there's the Wayfair decision with the Supreme Court. And that expanded the Nexus definition to not just a physical presence, but a economic nexus or an economic presence. Now, economic presence, that gets great. Kind of. It's getting more and more black and white every day. South Dakota v. Wayfair said that Wayfair said, we don't owe sales tax in South Dakota. We're not physically located there. We have no warehouses there. South Dakota said, yeah, but you sell enough in here that you should be paying us. It's like you're here. And so it went all the way up to the U.S. Supreme Court. And the Supreme Court sided with South Dakota. And they set a standard of 200 transactions or $100,000 of transactions, sales into a state to develop economic nexus.
Interesting. So let's say that I am an online retailer and I sell t-shirts and I do 500 transactions. I'm currently in New York. I do 500 transactions in Tennessee. What does that mean for me as a company with sales tax?
You have to understand a transaction is an invoice. It is not 500 shirts. It is 500 separate sales.
500 separate sales. Understood.
Okay. Or in Tennessee's case, and I'm trying to remember what their threshold is, but let's use the South Dakota Welfare standard of 200 or 100,000. You sold 500 t-shirts. Now, did you sell that in 100 different sales of 5 t-shirts each? You don't have physical nexus, but the total cost, retail cost of those shirts was 150,000.
Right.
You don't have economic nexus based on South Dakota Welfare because you had less than 200 transactions and I said 150,000.
You did say 150,000. I was like,
I
was going to say, you just do original works there, my friend.
50,000. You can edit that, Jared.
No, I'm keeping that one in. That's what makes it cool.
With $50,000 of sales, you don't have economic nexus. But now if those t-shirts were 150,000, now you have economic nexus. It's as what the states are saying, or what the court said, is that you have a large enough footprint of sales into a state that you might as well physically be there. You have an economic impact on that state's economy.
So you have to pay, as the business owner selling those t-shirts, I would then have to pay sales tax in Tennessee?
Yes, maybe, possibly, could be, it depends.
But aren't I already paying sales tax in New York?
Sales tax what?
In New York, where I'm based?
You don't pay sales tax in New York on sales made outside of New York.
Okay, I understand.
If you paid sales tax when you bought the items, one, you're foolish. And two, you got a whole other mess that we got to clean up.
Right. So that's actually an interesting concept, because you should have a resale certificate where you're not paying sales tax, because you're selling it to an end user who's paying the sales tax.
Sure.
What happens if you're a business owner where you have actually paid sales tax on an item that you're going to resell or a product that you're going to resell? How do you go back and recapture that? What could potentially be done?
There's a couple different ways of doing it. One is you only charge sales tax on the markup. That gets to be a pain in the rear. The other is that you go back to the vendor that you bought those items from and say, hey, I forgot to give you my sales tax exemption. Please refund me the sales tax that you collected. And that vendor is going to say, yeah, no. And so now you have to go to the state and apply for a sales tax refund. That's always fun, because the state wants the receipt showing that you bought it and paid sales tax. They want to see your sales tax exemption, which you should have if you have the sales tax license. And then they want to see that you resold those items. So now they want the transactions that you sold those items and show that you collected the proper amount of sales tax. And so you're kind of doing an internal audit of yourself. And then many of the states will say, yeah, here's your refund. Some of the states will say, hey, here's a credit.
I mean, I guess, is it a credit is better than nothing, but
Credit is better than nothing.
But when you've paid it, to your point, you said this earlier, when you've paid it out of pocket, that is something that you now no longer have that cash flow in hand.
Exactly. You have to remember, not everybody on the internet sells 200 items and makes that 200 items be 100,000. There could be a guy that is selling money clips for $4 a piece. And he happened to sell 200 into a state that has that as one of the economic thresholds. He sold $800.
So how do you help your clients keep up with these changes that you're constantly seeing at a state level, at a federal level? to make sure that they are compliant?
My research people stay up to date, to include myself. We are signed up for damn near every newsletter that the state will put out. We're signed up because we have sales tax licenses in literally every state. For at least one of our clients has a sales tax license. We get notifications of sales tax changes. Alaska, for example, just sent one out saying that they're getting rid of the $200 or the 200 transactions. They're going to limit it to the 100,000. And now some of the people listening to this are going, hey, wait a minute. Alaska doesn't have a sales tax. And you're right. The state does not, but cities inside Alaska do.
Interesting. So how would they bifurcate selling in the state versus selling in a specific city? How would they calculate that tax?
By what address did it go to?
Interesting. Wow. So what's one of the biggest sales tax issues that you've run into with a client based around the changes in compliance?
People not listening.
What? I didn't hear you. What did you say, George?
Exactly. All right. Let me give you an example of the trickiest state out there, and I think the most aggressive and the biggest pain in the butt, or what we call a PITA, pain in the backside. California.
Oh, California.
You gotta love California.
Anyway. California is a fascinating state.
California, when Wayfair passed, they originally said it was 100,000, 200 transactions, but then they later changed. And they said anybody, as it always was, anybody with a physical presence in California has to collect sales tax, make sales. And then they changed it to remote sellers, $500,000 within a calendar year, you have to collect sales tax. Okay, pretty cut and dry. And most people are going, oh, $500,000. Thank goodness. I'm not going to sell that much. I sell on Amazon. Cool. You got to define remote seller. A remote seller is somebody who has absolutely no physical presence inside the state. They have no warehouse. They have no employees. They have no independent contractors, and they are physically outside of the state conducting business. But they have inventory in an Amazon warehouse. According to California statute, inventory in a warehouse that you own the inventory. You are storing it in a warehouse that is not yours. Still is considered physical presence. You have physical presence in California, so now you have to have a sales tax license.
I mean, your product is physically in California at an Amazon warehouse, so I do kind of understand that. But how do is there a certain limit, minimum, maximum of how much inventory you have to have in this warehouse? Or could it literally be one t-shirt? Oh,
T-shirt.
Shoot. That's just
We'll go to Amazon and say, give me EIN number or social security number for every seller who stored anything in your Amazon warehouse. And Amazon turns it over. Now, this whole thing gets uglier, Jared. It gets a lot uglier. Now, they know you have physical presence there because they have the records documenting. They will send you out a letter saying you owe a sales tax because you have physical presence. You don't have a sales tax license. You need to get one. Here's the penalty. Here's the interest. Here's the estimate of what we think you're going to owe us. Oh, and by the way, the franchise tax board, who does the sales tax, also does the franchise tax. And if you're anything but a sole proprietor, you have to file a franchise tax return at the end of the year. And in LLC, it's a minimum of $800.
Oh my God. Now, there's the LLC. I'm assuming that's only if the LLC is active. Like if you're actively doing business, that's if you have an LLC, period.
If you have an LLC and you sell into California or have physical presence in California, you have a franchise tax return due.
You know, this is really interesting because we're getting into nuance on a state basis. But what's really important for the audience is these nuances exist in every single state. And these are the little things that you get tripped up on where it ended up costing you $2,000, $10,000, $30,000, $80,000, depending on how much your business is selling, if it is not taken care of properly from the beginning. So what advice would you give small and mid-sized business on how to make sure that they are staying compliant and balance their business growth so they don't run into a much bigger issue in the future.
There's very few of us out there, but find a sales tax compliance accountant. Okay. Many, many, many CPAs will do in their own state, even though that they may not enjoy doing it. They will do it and you'll end up paying for it. You can contact us. We'll work nationwide. You need to have a complete record of all of your sales from the Wayfair decision forward. I have a client, did not collect sales tax in Illinois. When he started, he was doing 10 to 50,000 a year in total outside of the state of that he was in. I don't want to give away too much information to client practice, but he was in a state that he had a physical nexus in, and we filed all those. And I told him, I said, man, you're getting big. You're getting huge. 1 year he was selling 50,000. The next year he sold 250,000. The year after that, it was 3 million. And he hasn't.
Oh, wow. Wow. Love that.
Yeah, I do too. It's great. But this is where you listen to your accountant. You're going to have physical nexus depending on where you get your stuff from, or you're going to have economic nexus because of the simple by volume. Illinois contacted this client and said, hey, buddy, where's our sales tax? The reason I say you got to go back to the Wayfair decision is that's when Wayfair dictated economic nexus. And so Illinois went all the way back to 2018. He owes approximately $500,000 in sales tax.
So let's say you're an e-commerce business. When you're deciding where to register for your sales tax, whether it's economic presence versus physical presence, what is the best way to approach that?
Well, again, you need to take a look at all of your sales and do it based on that state's threshold. Some states it's a calendar year. Okay. If between January 1st and December 31st, you sold X number or Y value, you have nexus. Once you have nexus until you don't. Meaning you get the license, you keep it, you just stay compliant until you're going to go out of business. That's my recommendation, because the cost of closing, reopen based on the roller coaster sales is just cost prohibitive. But get that sales data for that state. And you're going to have to do it for every state that charges sales tax and the states that don't, like Alaska, because their cities do.
So is there any state where you're technically not paying sales tax at all?
Oregon.
Oregon is the only state.
That's the only one I can think of off the top of my head. Even Wyoming, that doesn't have a sales tax, Montana, that does not have a sales tax, does allow the cities to charge a sales tax on certain tourist items.
That's very interesting.
Sales tax is controlled by the state, but the cities have the right to charge a separate tax. That's why you find in many states, Tennessee, they're flat rate, New Jersey, flat rate. Come to Colorado, folks. It's everywhere between 3.9 and I've seen 12, depending on where you ship it to.
So talk to me about this. I've got one of the merchants that we represent has several hair salons, and they created their own product line years ago, and the product line is growing exponentially, and they're in the 7 figures in sales just for their product line. They sell through Amazon as well as on their website. So how do these marketplace facilitators like an Amazon and Etsy or a Walmart impact the sales tax responsibility that these sellers have?
The sales tax responsibility will be the marketplace facilitator. Every state has said Amazon, Wayfair, Etsy, they will collect the sales tax for you.
Okay.
But again, you have to look at each state's laws. Let's go back to California. California says that you have a physical presence if you have anything in their Amazon warehouses. Do you know why they do that? It's not because they expect you to pay sales tax on it. The marketplace is already doing it. But they want their franchise tax. And if you have a sales tax license, they know what business entity you are, and now they're going to get you for the franchise tax. If you register with the Department of Revenue, many of those Department of Revenues are going to require you to register with the Secretary of State, basically getting a permission slip to conduct business in their state as a foreign entity. This is all regulation and monitoring. Okay.
It's fascinating because these are things, a lot of this that I'm not actually aware of, and we deal with a lot of businesses. Now, and the thing is that many of the business owners know this, but a lot of them aren't aware of this because I know in particular some of them that I'm close with aren't necessarily doing this properly from the conversation that you and I are having. So what should an e-commerce business know about reporting sales in their home state versus out-of-state shipping rules?
Again, when we're dealing with marketplace and marketplace only, there's a difference between marketplace and selling on your own website using Shopify or WooCommerce or whatever. Completely different than just Amazon or just eBay, just Etsy. All right. So we need to make sure that that distinction's there, because those marketplaces are going to collect and remit any and all sales tax for the most part. Again, we'll come back to Colorado on that one. They will collect it, remit it on your behalf. They'll take the sales tax collected out of your cut and maintain that money.
Gotcha.
I mean, you'll get that. But you have to have the sales tax license in your home state so that you can purchase those items without paying sales tax by getting your sales tax exemption. Your sales tax license is your sales tax exemption. One license works for every state, right?
Right.
Wrong.
Wrong.
There are 11 states that will not accept the sales tax exemption from a state other than their own.
Okay. So let's say I've got one of my other merchants is a candle and fragrance company, and they sell in they don't sell in all 50 states, but I know they're in about 35 states. So let's say there's 5 states that all require different sales tax compliance, compliance, whatever it may be. As a business owner, what do you have to do to make sure that you have the right sales tax exemption forms for each one of those states?
You have to check with the state. Where the exemption form goes to the vendor that you're buying your materials from.
Right.
Okay. And so if you said, what did they sell?
Candles and
All right. If they're selling wax candles and soy candles, where's their vendor for the wax and the soy? If their vendor, regardless of, let's say that they're located in, and we're going to pick a state here just for fun, Colorado, my home state. They have a vendor in Illinois that they buy their wax, their paraffin from. Illinois will not accept a sales tax license from Colorado or any other state. They will only accept their own. And to get a sales tax exemption in Illinois, you have to get a sales tax license in Illinois. So if you want to keep buying from that vendor and not pay sales tax, you have to get a sales tax license in Illinois.
So let's say you're a sales business and you're online, or even if you have, it doesn't matter, a portion of your sales are online and you're growing and expanding. What should you do as a business owner to sit down and make sure that you are mapping out the right plan to be compliant with sales tax across all of the different states that you're going to be selling in?
By talking to your sales tax accountant. That is, unless you want to spend hours and hours of research on the stuff that we do every day, you're going to need to talk to them. Your other option is to go into every state statute, look at what their economic threshold is. Do they include marketplace sales in that economic threshold? Some do, some don't, some will, some won't. And if you're a mixed seller, that throws a whole nother wrench into it. Will your state or the state where your vendor is accept a sales tax exemption from out of state? 11 of them do not. The others do. California, Illinois, Washington, D.C., they don't. Okay, those are the big ones. And sit down and make a plan and say, I'm not going to purchase from people in these 11 states.
Wow.
Or I'm not going to sell into these states because I don't have the sales tax license to do that.
So sitting down and looking at where you're going to be acquiring product and where you're going to be selling the product are really important for your business model to understand what your costs are going to be. And that's something I'd venture to say 99% of business owners never look at. So just deciding that you were going to acquire your paraffin wax from a state that's more favorable, accept your sales tax exemption versus buying from one who won't, that could save you thousands of dollars as a business owner.
It could. It depends on how stubborn you want to be. If you're insisting on not paying sales tax, but it's cheaper, well, you're making a bad business decision because it's cheaper even with the sales tax. But if you want to not pay sales tax at all, and you can get a better price from a place that won't charge you sales tax if you get the sales tax license, why are you saying no?
So talk to me about some business owners who may be stuck in, all right, I didn't have the professional on my side to help guide me through this. I know that I'm paying more than I should be paying. What does a reverse audit look like? And what is the benefit or the value to the businesses in running one of those in terms of recuperating overpaid sales taxes?
The reverse audit's going to look at all of your sales and your sales tax filings that you have done.
Okay.
They're also going to look at the sales tax that you should have filed and should have collected and didn't. It's going to be an exposure, basically. We take a look at all of those sales. We take a look at everything that is going on with that and see, did you overcollect? Did you collect and you shouldn't have? How are you going to get that money to the state, or are you going to send it back to the clients? We take a look at all the items that are in effect for the last several years. We'll go back as far as you want us to, but no sooner than Wayfair, unless you had a physical location, and then we'll go back as far as you want us to.
Right.
And from that, we can figure out, did you overcollect, undercollect? Did you not collect at all?
So let's say you undercollected. What could that mean for your business?
Well, if you undercollect it, the state doesn't care. You're going to pay what you should have,
Okay.
and it's going to come out of your own personal pocket or the company's pocket. On the same note, if you overcollected, well, I don't recommend doing it, but if you overcollect and you're not doing it maliciously, you're going to just pay what you overcollected, because if you collected it, you will pay it.
Understood.
The other option, there is one other option that you could do that is through a needle's hair, or a needle's eye, of possible things, is if you collected sales tax and you should not have. You can either pay it to the state, but to pay it to the state, you got to get a sales tax license so they know where it goes to, or you have to refund it to your clients. If you accidentally charged no sales tax, you're going to pay it. If you accidentally charged sales tax or an excessive amount of sales tax, you can refund it to the client, and you won't be in trouble for that unless you were supposed to collect it, didn't know that you were supposed to collect it, and then refunded it. And then later on you get audited and they can go back and see that you should have, and now all the money that you just gave away, you got to pay up.
Oh God, Lord.
This is audit. Internal controls are the only way to save yourself out of all that.
Yeah. Wow. So talk to me about how you help clients negotiate voluntary disclosure agreements.
Voluntary disclosures are not everything that they're cracked up to. We do them. Okay. A VDA, voluntary disclosure agreement, you won't get out of the sales tax that you should have collected. You're going to have to pay it. But what the VDA does is I go to the state and say, hey, I've got client anonymous because I'm not telling them who you are. And they should be paying you $100,000 in sales tax for the past 5 years. They screwed up. They didn't know. But they're coming forward now because they discovered the problem and they want to pay and get current. We can get rid of the penalties. We can get rid of the interest. You're just going to pay the tax.
And
Going forward, you'll be compliant.
And this is strictly on product sales, physical product sales?
In New York State, the maintaining physical property, cleaning a fish tank is a taxable service in the state of New York. They are maintaining physical, tangible property.
So home services, landscaping, housekeeping, home repair, those are taxable services?
I would have to dig deeper into it. The one I looked up specifically was cleaning of fish tanks.
I'm like really
Landscaping, you got to buy the trees. You're going to pay sales tax on those. You're going to buy the flowers. You're going to pay sales tax on those. Now, putting them in, is that sales taxable? I'd have to look in New York. In Colorado, it's currently not.
this is knowing New York, it's probably taxable. But we can have that offline conversation. I just find this all fascinating because, and this is why I love 0 to 100, because you can find out some stuff that you're like, wait, what? I did not even know that was actually a thing. So even for me right now, my mind is kind of blown because what we've just gone over with sales tax is something that I'm not at all used to experiencing or understanding from a service standpoint, a little bit from a product standpoint in the clients that we work with. But this is super fascinating. Talk to me about, before we get into our fun rapid fire section, talk to me about some of the trends or challenges that you're seeing right now in the sales tax compliance arena and what business owners can do for 2025 to get ahead of changes that might be coming about.
To get ahead of the changes, you need to get compliant now. You are better off telling on yourself than to get them to find you. Remember that, I don't know if you're in the military or not, but in the Army, it was better to beg for forgiveness than ask for permission. Yeah. And that's kind of true in sales tax. If you don't know about it, find out about it. If you get caught by the state, they are relentless, and there is no such thing as a VDA if they contact you first. If I contact them, now we can negotiate. There's a difference. I think the one thing that needs to happen, and again, I jokingly said it, but there's very few of us out there that work with other companies. There's a ton of sales tax accountants out there. I'm not saying there isn't, but most of them are like captive agents for insurance. They're with State Farm, they're with American Family. They can only sell their product. Every retail outlet has people who work solely on sales tax. But you, me, and Johnny down the road that are doing these small e-commerce businesses and were not put into these big conglomerations don't have a sales tax specific account. Find one. I don't care if it's me or not. Find one. Find somebody that you're comfortable with, somebody that has the knowledge, the expertise, the experience to do that, and get them to look over your sales and see where are you lagging? What is your exposure? I can tell you right now, it's going to cost you around $15,000 to get an exposure analysis done.
Wow.
But my client that is owing all that money to Illinois, they would have saved a lot of money had they spent that money to find out what their exposure is. And now Illinois, they have reciprocity with quite a few states.
Wow.
You think they don't talk to each other?
Well, it is the government always trying to collect their taxes, and we will leave that at that. George, it is fascinating what you gave us in terms of how to look at our businesses for something that seems really small and nuanced, and the impact that it could actually have on our bottom line. So to all of our audience members out there, we need to make sure that you are sales tax compliant.
Yes.
Number one, if you're selling a product, and frankly, if you have a service, you might want to check and make sure that your sales tax compliant on your service as well. But George, before we wrap up, we're going to do our little rapid fire section. Are you ready, my friend? You ready?
As ready as I'm going to be, I guess.
Who truly wins the race, rabbit or turtle?
Who truly wins the race? I'm going to tell you the turtle does, but the turtle has to have some jackrabbit legs.
Love that. I love
So, because you need to make sure that every I is dotted and T is crossed. but you got to do it as quick as you can.
I love it. It is a zombie apocalypse. You have to get out of your home and protect your family. What would be your weapon of choice?
AR-15, 30-06, 308.
So you're actually prepared if it's a zombie apocalypse. I want to be around you.
I have yardage markers on my driveway.
All right. You're going to teach me how to build up my arsenal then. What is one of your favorite quotes in business?
That's a tough one, actually, because there's so many good ones out there.
Give me one of your top quotes as a business leader that you think other business leaders should abide by.
Well, I don't know if it's a quote as much as it is a philosophy that I have.
Go for it.
Every person is your only client when you're talking to them. You're not my only client, but right now, while we're talking, you're my only client.
I love that. That's awesome. That's powerful. Is there a book that you would recommend that our audience of owner-operators, entrepreneurs read that could help them advance in their business?
There was a book that I finished reading not too long ago. Well, I didn't finish reading it. I paged through it. And I'm not giving a shout out to this company that provides it, but it was the 2024 tax code. If you don't know the deductions, you're not going to get them because you'll miss them.
So either read the tax code or hire the right tax professional.
Or hire the right tax firm. Exactly. I have two companies. I do sales tax with TMTY, but I also do income tax through Westside Tax Certs.
Right.
You know, and we are married basically at the hip.
Got you. Give me 3 money-saving tactics that our audience can employ for 2025 to add to their bottom line.
Get professional help in the areas that you don't know what you're doing wrong. With my company that does bookkeeping, if you hired us to do bookkeeping, the amount of money that you pay us to do bookkeeping will probably be less than the taxes that you would save by having screwed up books. And it may not be this year. It might be 5 years from now when you get the audit. So it may not be that. Number 2, don't buy every asset that you can possibly think of at the end of the year because, oh my God, I have $100,000 in profit and I'm going to pay $20,000 in taxes. Okay. If you want to spend $40,000 on a truck that's going to save you $5,000 in taxes, didn't you just take $35,000 out of your own pocket? And the final one was never buy a house for tax purposes. Same principle. You might be able to itemize. You might be able to take that home interest off, but the amount of home interest that you take off is only going to lower your income in that bracket. So why pay $25,000 in mortgage interest to save $5,000 in taxes? Doesn't make sense.
Very, very good advice.
Buy a house, don't get me wrong, but not for tax purposes.
Great advice. So last question, give us 2 key people in your life that helped you get to where you are and build the success that you have in your career.
My parents.
That's awesome.
The reason I say that, my stepdad and I we didn't see eye to eye at all. Every Easter when I was growing up, we were out at the dirt pile transplanting trees for the garden house, greenhouse, and nursery that we owned as a family. But it taught me that every Easter I had to be out there doing that or family didn't eat. The work ethic that it instilled in me, I think, drove me to where I am today. Like I said, I own 2 companies. I can honestly stand here and tell you I have never not had 2 jobs in my entire life from the time I was 16 on.
Wow.
So I guess my parents.
I love it. That's awesome, man. George, before we bid you adieu, please tell the audience where they can connect with you.
You can call me directly, area code 719-646-2999. Leave a message. Tell my receptionist where you heard us. We'll get back to you as quickly as we can. You can email me, George at TMTYLLC.com, or you can go to the website, TMTLLC.com.
George Sleeman, thank you for joining us on 0 to 100.
It has been an absolute pleasure, Jared. I look forward to maybe talking to you again on another podcast.
Yes, sir.
Thanks for tuning in to 0 to 100 podcast. We hope you feel inspired and ready to accelerate your business. Remember, your journey to success starts with a single step. Keep learning, keep growing, and keep striving for greatness. For more resources and show notes, visit jaredguyrandolph.com. We'll see you next time.